Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John Coleman.
Dear, what up? What is poppin'?
JC, we were just on this awesome town hall meeting with Rocky and his crew.
Word.
And one of our loyal listeners,
The disciples. Rocky's disciples.
one of our loyal listeners asked you to do JC.
Yeah, and I gave him a half-assed effort.
You gave him a half-assed effort. What's up with that?
Because it's exclusively for this. I'm not some heckler like, hey, do the thing. Hey, do the thing, Urkel. Yeah, no, what? If you want to hear JC, you got to tune into the podcast.
Well, how about this? I really want us to do TLOP Live in February in Orlando, Florida with Renee Rodriguez. Shout out to Renee.
Shout out Renee.
I hope y'all have gone out and pre-ordered or purchased his book, Amplify Your Influence.
Yeah.
I'm going to purchase like a hell of a lot of them,
Word.
hundreds of them.
Mm-hmm.
But I hope, like I was driving 6.5 hours yesterday back from Georgia. And when you're stuck on the road, what do you do?
Bitch and complain?
No, your mind wanders.
Oh, yeah.
No, bitch, I have a great life.
Right.
I got you. I got the podcast. I got the mortgage
I'm
company.
sure that's what goes through your mind in traffic. You're like, God, I have such a great...
I have such a great life. I'm so happy JC found his way to me. Yes.
Okay, yeah.
Yeah, so anyhow.
Your mind wanders when
my
you're on the
mind
road.
wanders. I was like, man, let's say we're able to do TLOP Live. It's a live sales event for the fans of the Loan Officer Podcast. Those people who are checking us out, both on YouTube, Spotify, Apple, anywhere you find podcasts. They're liking us. They're sharing us. More importantly, tell your damn friends about us.
Tell somebody.
Unless you don't care about your friends. And then, you know what? Don't tell them.
Yeah.
But if you care about them and you care about us, let them know. We are trying hard. No, not trying hard. We're hoping hard that we get to 10K on YouTube. That's 10,000 subscribers. I would love to have it done by the end of April. The problem is we would need like 1,300 people to subscribe
So we need
between now and April. But if everyone who's already subscribed
tells a buddy,
tells a friend who tells a friend, we'll get there. Get on there, like, subscribe, check it out, comment.
Yeah,
all
or
right.
create dummy accounts like you used to do when you get the free coupons.
The website, tloponline.com. Check out Sales Tools. I'm just going to tell you, go to Sales Tools. Sales Tools videos. That's where you want to be. Sales Tools, guides and trackers. That's where you want to be.
The bee's knees.
Yes, the bee's knees, as JC would say. Check out tloponline.com or just go to theloanofficerpodcast.com.
Nice promo.
All right. But we're talking about this event that we want to host for the TLOPers.
Yeah.
So I was thinking, how cool would it be? Like, A, we're going to have some badass walk-up music because you know how I roll.
You've been talking about it since I started, so yes.
No, I love walk-up music. That's my thing. I would have a DJ follow me around.
Otis is what you say over and over again.
Don't ruin it. Now people aren't going to want to come because now it's already ruined. They
That's
know the
an elevator
music.
brand. They don't know what that means.
Okay. But like I was thinking, like how cool would it be if we like started the event, lights dim.
Yeah.
And it's ladies and gentlemen, boys and
girls.
then you go, Jay. Yeah, like how cool would that be?
Be amazing because I'm gonna be the one on the black in the back flickering the lights, like getting like, hey guys, you ready? The mic, all hands on deck
at the local Super 8 motel.
Hey, they have cheap rates on the conference room.
Yeah,
the conference room came with the room, so it's like, hey guys, don't be mad when you pull up, and it's an extended stay.
Oh Jesus. Oh Jesus. Hey, we'll do you better than that. Like when you think Orlando, you should think like iDrive, Universal Studios, Disney Springs. Like it's going to be something like that.
Yeah, don't worry.
And we're going to do it in February because it's beautiful weather typically in Florida in February. Not so much the rest of the country.
Great idea. There it is.
You
have a reason. You have a reason to come out in February.
Yeah, and we have some time to plan it.
Yeah, come. March 29th. Hey, so did you book that venue? What venue? Oh shit. Okay.
Me and January 29th. We're going to do it in February. February 2023. All right. 0223.
Okay.
Today's episode.
Yes.
Listener request.
It is.
Several times over. Not the same listener.
Yes.
Several times over.
That's the same.
Right. If it was, then we'd call that person mom.
Yes.
Right?
Or a loyal fan.
Or a loyal fan. No, but like with the same request.
Correct.
No.
Or my wife.
Your wife? Did your wife listen?
No, you said the same request. Like I asked you to do that multiple times, same request.
Okay. Yep. There you go. But no, what is it? What are we going to talk about?
How to bring value.
We're not talking about how to bring value. What?
Bro, I just took the note. What are we talking about?
No, you're not. How to bring value. I don't want to do how to bring value.
Okay, so what do you want to talk about then?
The first one that you rolled into my office an hour ago when you started setting up all the equipment and I couldn't get my nose out of working. The difference between
Mm-hmm.
Bankers, direct lenders, and brokers.
Well, you do know. So you did know.
I did know, yes.
Yeah, good for you.
But John, they said I don't give you enough time to talk on these episodes, so sometimes I try to cue you up.
Yeah, and then you cue me up, and I'm like, I don't know.
Yeah, no, you actually gave the next episode that we're probably going to do is going to be how to bring value. And we can talk about that a little bit because on the YouTube channel, we did have a TLOP comment like, hey, can you do some things on like RESPA Section 8? And I was like, ooh, I don't know if I want to do anything that's too compliance heavy. One, because the minute I start talking about compliance, I could put myself in a pickle or put us in a pickle where we're potentially talking about giving legal advice. Don't ever want to be misconstrued that we're giving legal advice.
Right.
So I try to stay away from compliance. Plus, compliance is boring, and nobody likes compliance officers or people who are living in the compliance world. So I try to stay away from that as much as possible. Now, I can give my opinions on RESPA Section 8, but please know that are opinions based on my experiences. But what I got from that request was maybe we don't dwell in compliance and maybe we don't geek out on RESPA Section 8, but maybe I can talk about how someone could bring value to their referral partners and loop that into me talking just a little bit about RESPA Section 8 and my thoughts and opinions and experiences when it comes to it.
Word.
We're going to hold that for another episode because I do want to do a little bit of prep on that. And by prep, I mean like my next big run, I want to think about it.
Yeah, exactly.
Yeah.
Don't throw the people for a loop.
Yeah.
What is preparation?
I bet JC and Dio do a lot of prep.
Yeah, that was
today JC's prep was sitting around waiting for me to get finished with whatever I was working on.
Yes.
And I kept on telling him 5 more minutes. I told him 5 more minutes for like 45 minutes.
Yeah, but here we are. I'm used to it now. Like I just build in buffer time with you. It's fine.
Yeah, you're on Dio time. I apologize for that. I'll work on that.
You've been saying that
I'll
for a
work
while.
on that. Yeah, maybe by the time I'm 44 or 45, I'll have that figured out. But until then, I'm still not a grown up.
It's fine.
All right. So no, let's talk about the difference between a bank, an independent mortgage banker, or what people call a mortgage, like just a mortgage banker or an IMB, and a broker. Right? And we can talk about what does it mean to the consumer? What does it mean for the realtor? We can think about what does it mean to the mortgage professional? Because they all have their pros and cons. Like they legit do. So I think it's good for people to understand, well, what are the differences? The good news is a mortgage is a mortgage is a mortgage.
It's a mortgage.
At the end of the day, nobody wants a mortgage.
They want a home.
They want a home. Do you know what people dream of?
Being debt-free and not having a mortgage.
They dream of not having a mortgage. No one has ever dreamt, not no one, it's a strong word. Rarely does someone dream about not owning a home.
Right.
But they dream. So a mortgage is just that, whether it's a 30-year mortgage, a 15-year mortgage, whether it's an ARM, it's a mortgage. It is a financial instrument used to purchase a property. The mortgage is the legal document that attaches the promise to repay to the collateral, which is the property.
Word.
And you can get a mortgage by going to your bank. You can get a mortgage by calling a mortgage banker or a direct lender, people will call them. Or you can get a mortgage by going to a mortgage broker. Hell, you can go to Walmart or Costco. And they'll tell you they're going to give you a mortgage, but really they have like a joint venture with a mortgage company. And then that mortgage company will give you a mortgage. So you think you're getting it from Walmart. You think you're getting it from Costco. No, getting it from someone else that they have joint ventured with. But the joke is you can go to Walmart or Costco and get a mortgage.
Well, now I know.
And now you know. All right, so let's start with the banks.
Okay.
Real simple, old school. Who has my money? The bank has my money. Who do I probably have a checking and savings account with? A bank.
Yeah.
Who do I maybe have my car loan with? A bank. Maybe not. But, who's my credit card with? Probably a bank. If I pulled out my credit card, it probably says Chase on it. Well, Chase is the bank. My wife's credit card says Bank of America. Bank of America is the bank. Even though my wife doesn't bank with Bank of America, her credit card is through Bank of America. Right? So a bank, you can go to your mortgage, you can go to a bank and you can get a mortgage. Now, whether you work for the bank or you're going to get a loan from a bank, I think both of these descriptions are going to correlate with your experience. When you work for a bank, the good news is if they want your business, by all means, they're going to get it.
And we'll find a way.
They will get it. If they want it bad enough, a bank has the ability to price a mortgage loan so cheap that they will actually lose money on that mortgage loan.
I'll take this L as long as you do the loan with me.
Because if you think about it, the bank has what are called deposits. Well, when John Coleman and all of John's friends deposit all of their money at a certain bank, that bank only makes money when they lend out the deposits they took in. Mm-hmm. That's how it works. You drop your money off, you store it with them, they pay you a small annual rate of return. In return, they use your money to go out and lend it to businesses or private individuals, whether auto loans or credit cards or mortgages or business loans. So if a bank wants your loan bad enough, they can price everyone else out of the market. Now, that's a good thing for the consumer when it's happening, and it's a good thing for the loan originator when it's happening. But when the bank gets full of doing mortgages, they don't want to do mortgages. They very well could jack their rates up. How do you prevent someone from purchasing your product? Make it expensive. Yeah. Price it out of the market. So the benefit is also the downfall. Yeah. So if I'm a loan officer working for a bank, the good news is the bank has a bunch of clients. They have a bunch of customers. If I'm a loan officer, I might not have to work really hard to get out there and make a name for myself amongst the loan originators in my market because I have a captive audience. I have all of these clients who are already bank customers, and their natural reaction is to reach out to me for a loan. Now, when it comes to my programs and my products and my rates, I would guess that my programs and products are going to be more on the conservative side because, again, as a bank, I don't have to be overly aggressive. I already have a captive audience. And as a bank, if I really want mortgages, I'm going to price it to where I get every mortgage until I'm full and I'm done and I've met my quota, at which point I don't need to offer these incentives. Also, when I'm a bank, I don't necessarily have to be the best at getting loans closed quickly and efficiently. It's a big business. And when you're a bank, it's being run by people who optimize numbers typically. So a bank typically may take longer to close your transaction. If I'm a loan officer there, I'm not going to be able to turn loans around as quick as I maybe need to, which means it puts me at a competitive disadvantage in a market like we're in, because if the seller's requiring a 21-day close and I need 45 days, and if you're a consumer and you're going to a bank and you need to close in 21 days, but but your bank can only do it in 45 days, doesn't matter what the interest rate is. The interest rate's null and void. Yeah. It's an interest rate for a home you can't buy. Right. Because the person selling the home wants you to close in 21 days. Your bank's telling you 45 days.
Are there larger banks like Bank of America that are known, for doing mortgages well rather than...
No.
Really?
No. No, I'm going to go out there and say, I'm sure I'll make some enemies or whatnot, but no. No, there are not many big banks that are, oh my God, they have a phenomenal mortgage division. Now, those same banks will buy... will buy mortgages from independent mortgage bankers. And we're like, yes, we love selling loans to insert name here, Wells Fargo, Chase, Flagstar, whatever the case may be. But in my career, over my 18 years of experience, I haven't found oh my gosh, that bank is best in class. Banks tend to be a little bit more conservative. Right. They tend to take a little bit longer to get a loan processed and underwritten. Sometimes they have the cheapest rates in town. If they, like I said before, if they want to make them cheap, they will. But then if they don't need that revenue or they don't want any more mortgages, they need to turn the spigot off a little bit, they will. Which, as a consumer, it's less predictable, right? It's less certain. As an originator who works there, it's less predictable. It's less certain. And they tend to be more conservative. As an originator, the positive is they may provide me leads.
All day.
Now, they also may provide me a lower comp plan to what my peers are making. So I have to do more to make less if I work for a bank, but the bank's going to provide me leads, and they may have some really cheap interest rates from time to time. Awesome. But they also may make it difficult for you to go out there and build relationships with referral sources because you can't continuously be relied on to close loans quickly and efficiently. Mm-hmm. And because you don't always have the most competitive products that you're putting out there, or you may have a smaller product selection, like meaning you don't offer all of the programs and products that are out there. Right. So I work at a bank and maybe I can't do a bank statement loan, or I can't do a DSCR loan, or maybe I don't have a construction loan, or, there's certain aspects. Maybe they're tighter when it comes to FICO, low FICO. Maybe they're tighter when it comes to high DTI. Right. So that's how I would describe a bank to somebody. Now, don't get me wrong. I have a buddy who works for a bank. He works for Huntington Bank. It's a great opportunity for him. He's absolutely crushing it. He is super busy, and he's going to make the most money he's ever made this year. I have another buddy. He works for Regions Bank. He has been at Regions Bank for as long as I've been with Waterstone Mortgage. He loves it and crushes it. This dude's in Jacksonville, Florida. I would guess by looking at his production, he is a top 1%er both in income, and he is a top 1%er in terms of units and volume closed. So I'm not knocking it. I'm just trying to give a full understanding of the pros and cons.
If you work in a bank, do you still, I know it may be different per branch or per company, but if you work for a bank as an LO, are you allowed to go out and throw your own happy hours? Are you encouraged to do some of the more grassroots guerrilla tactics to kind of drum up business, or do they just expect, just stay in your little cube and we'll just feed you loans?
My understanding, my experience, the larger the financial institution, the tighter the handcuffs. You're definitely going to have more restrictions and more handcuffs when it comes to building your personal brand, because your personal brand cannot be larger than the corporate brand. So because of that, you're not going to be as open on social media. Right? You're not going to be as open to market to your database. There's definitely going to be some more red tape and more hoops to jump through.
Okay.
All right? Mm-hmm. So we're going to do a progression, right? Because mortgage broker is the most flexible. So we're going to go bank, depository, big bank lender, bank loan officer. Why you should or should not get your loan from a bank. Why getting your loan from your bank may be the best decision you made. Maybe the rates were super cheap and you had 60 days to close and your loan was super easy to underwrite. Oh, have at it. Or while a bank wouldn't make any sense. And the reason why the bank wouldn't make sense is because your loan is a little bit on the fringe, or you had to close quickly, or the time that you were buying is when the bank that you bank with decided they're done with buying or purchasing or originating mortgages. They need to take a break, so they've jacked up their rates and their fees. All right. And when you originate there or you bank there, it's not like they have any other delivery methods. It's nope, it's their product, it's their rates, it's their guidelines, period, end of story. All right. So an independent mortgage bank, and look, full disclosure, there is a reason why I work for an IBM and I have for the past 14 years. There's a distinct reason. I never went to work for a big bank and I haven't gone to work for a broker yet. So people should know there's a bias coming from this conversation. I'm not going to hide from it, but I'm going to do my best to squash it as much as humanly possible. But an independent mortgage banker is somebody who that's all they do. All we do are mortgages 365, 24/7. All day. But we're big enough that we are going to process, underwrite, and fund our own loans. Now, when we process, underwrite, and fund our own loans, we're probably not going to hold on to your loan. We're probably going to deliver that loan to an end investor in the secondary market. That end investor, by the way, may be one of those big banks. Or it may be a company you've never heard of. Companies that solely just specialize on servicing loans. But an independent mortgage bank is where the bulk of mortgage originations are being done in today's market, and really has been for the past 10 years. And an independent mortgage banker, what people call a direct lender, it's kind of a hybrid. It's the best of both worlds. It is the power of a bank with the flexibility of a broker. And in certain markets, having that power with the flexibility is what's required. Or for an originator standpoint, it's the mortgage millionaires I know, they work for independent mortgage banks. I'm not saying there aren't mortgage millionaires in the broker world, because I know there are. I just haven't met that many of them. And maybe it's because I'm the sum of the people I surround myself with. I'm an independent mortgage banker or just a mortgage banker, and that's the world I run in. Those are the circles I belong to. I don't know any mortgage millionaires that work for a bank. Period. Don't. Never met one. And that's because typically the comp plans at a bank prevent someone from doing the amount of volume that, or actually prevent someone from making the money that they earn because they're maybe not going out in, it's not their lead. It's deemed as the bank's lead. Or those big banks don't allow for optimization and team building. So, but independent mortgage bank, it's just that. It could be a super large company that's worth hundreds of millions of dollars, right? I mean, it's, and they very well are operating what's called a line of credit. And that line of credit was given to them by another financial institution. Let's say UBS. UBS offers John Coleman, independent mortgage banker, a $50 million line of credit. John Coleman funds $80 million a month in mortgage closings based on that line of credit. Once John funds those loans, he sells them off in the secondary market. But it's John Coleman, and it's his team that's processing and underwriting and funding that loan. The capital you're using to fund it is off of your warehouse line. But the best way that I describe a direct mortgage lender is we are the best of both worlds because we're the power of a bank, but we're the flexibility of a broker. So maybe it's better to understand, well, what is a broker? Like, what does a mortgage broker do? Well, if a mortgage banker or a direct lender is underwriting and funding that loan themselves, and by themselves, I mean it's their company's staff. A mortgage broker is not. A mortgage broker is like the word brokering is probably, hey, let's broker a deal.
Yeah.
Right? That person is going out and they are putting two pieces together. Let's broker a relationship. Right? Let's find a buyer and a seller and let's introduce them.
Yeah.
So they find the seller. The seller in this case would be someone looking for a home loan. And they take down their information. They help them determine what they would qualify for. And then they match them with a buyer. The buyer is going to be the actual lender, the lender that's going to underwrite and fund their loan. And when they do so, here's a positive of a mortgage broker. They may very well be able to find the cheapest interest rate out there.
Cheapy cheap.
As cheap as you can find. They can find it for you. But with cheap comes uncertainty.
And asterisks in small fine print.
Yeah, it comes uncertainty. And the uncertainty is this. They don't work for that company. They don't have any pull. They don't have any say. And they can't necessarily control the transaction. So they may be able to quote you a super cheap rate, but when they need to get an answer, is it going to take 1, 3, or 5 days to get an answer to their question? If something goes sideways, are they going to be able to pick up the phone and rectify it? Or they pick up the phone and they too get lost in
the hold +2 for.
Correct. Yeah. So the lack of control that comes with a mortgage broker versus the control that a mortgage banker has. Now, also the broker community, they could have relationships with 15 or 30 or 45 different lenders. But there are certain programs and products that investors will not open up to the broker community, but they would open up to the bank or the mortgage banker community because they look for net worth, right? So if a broker, which is maybe a small operation in whatever city you currently reside in, let's just say Indianapolis, Indiana, that broker shop that has 5 loan originators and 2 processors and 1 admin staff might not have the net worth to do certain loan products because those end investors require. But what does a broker do? They take your information. They answer your questions. They will let you know based on their professional experience what you will qualify for versus not qualify for. They have tools at their disposal that they can issue a mortgage pre-approval. But then when you go under contract and you're ready to lock something in, they have to lock that rate lock in with a third party. It's not their company. But there's a lot of flexibility with becoming a broker. Well, there's also a lot of heavy lifting, right? Like imagine this. When I'm a mortgage banker and I have to lock and disclose a loan, there's one way I have to do it. Now, my company may deliver that loan in the secondary market to 20 or 30 different investors who mean my client may end up making a payment to 20 or 30 or one of those 20 or 30. But my process as an originator was the same regardless of who that loan got delivered to. My process as a consumer, let's say I've obtained multiple home loans in the past 5 years, 3 in the past 5 years. If I used John Coleman at XYZ Mortgage Bank, my process was probably pretty similar all 3 times. But if I used a mortgage broker, well, the process is going to be different depending on where that broker sends my loan. Oh, well, this time they send it to Freedom, so I have to follow Freedom's process. And as an originator, I have to know Freedom's process. Oh, well, this one's going to Union Home Loans, so I have to do it Union way. This one's going to New Res. I have to do it the New Res way. This one's going to Caliber. I have to do it the Caliber way. This one's going to Rocket. I have to do the Rocket way. This one's going to UMW. I have to do the UMW way. So as an originator, you can see where that could be a lot to have to retain. Like, oh, wait a minute. I need to remember if I'm going to take this loan to this particular company, then I need to use this form, upload it into this system. I need to remember that password. And oh, they take this company pre-underwrites, and then they underwrite, and then it gets pre-funded, pre-closed. Gosh, I can't remember. But that company is quicker, but they have the worst rates. This company is slower, but they have better rates. And how much time do I have on this contract? And if I run into an issue, do they have a sales support hotline that I can call? Right? There's a lot of uncertainty that goes along with the broker process. But there are people out there that have mastered it. There are people out there that, man, they're consummate professionals that have just absolutely narrowed it down. They know who their 3 to 4 go-to investors are. They know exactly how they operate. They may even have such strong relationships that when they pick up the phone, people do call or people do answer. Right. And the benefit their clients get is they may get some of the best interest rates out there. And if they have a really good broker, maybe the uncertainty doesn't faze them.
Do you see technology phasing out brokerage? Because from my point of view, when I hear like a broker, it reminds me of travel agents. Like when you walked into like a physical brick and mortar and someone like helped plan your vacation. Well, this person has the best like flight and I can match you with this hotel rate for a total package. Is that fair to kind of?
Yeah, I would say the technology will enable the broker to get stronger.
Oh, okay.
Yeah. 15 years ago, 70% of all loans were originated by a mortgage broker. Then after the financial collapse, that number dropped to below 10%. And the reason why it dropped below 10%, whether it's fairly or unfairly, is not for this discussion or this podcast, but ultimately, a mortgage broker doesn't work for the end investor. So when people defaulted, when fraud was committed, when the shit hit the fan, the broker was blamed because they're deemed to be like, well, we had no one monitoring them. No one was holding them accountable. No one was making sure that they were being compliant. They literally were 1099 independent contractors that were sending in documents and loan files. So when all of that hit the fan, the broker community felt the brunt of it. Right now, the broker community, I mean, it's grown substantially, but I'd guess they're probably somewhere around 20 to 30% of loans being originated. That's up from 10% just 10 years ago. So that's a pretty large, substantial increase. But I would see technology allowing the broker to operate a lot closer to an independent mortgage banker than it would
phasing them out.
Phase them out. I think if anyone got phased out, the big box retailer would be phased out. I could see a big box retailer looking at their mortgage department or the mortgage division. Like big banks don't like mortgages. Big banks don't like mortgages. Well, they love them in years like 2020 and 2021, but it's a very volatile industry that's very high in compliance, and the profit margins are pretty slim and unpredictable. So the whole risk versus reward, you take a lot of risk when you have a mortgage department from just a compliance regulatory standpoint to make a little bit of money in an industry that is full of cyclical booms and busts. But banks do mortgages because they have to. So I think if technology were to do anything, I think technology would impact the loan originator that works for the bank. And we've already seen that. In the past decade, big banks used to have an outside sales force. Many of them got rid of their outside sales force and brought everything inside. And they said, basically, we want to commit a sales force that just protects this house. Meaning we want to prevent our current clients from going out and obtaining home loans somewhere else. But I don't care if my loan officers go out and bring in non-bank clients to do a mortgage with us. I care more that they just keep the clients we currently have from going out elsewhere. Right. So to answer your question, I would say that more on the big bank than I would.
Okay.
I mean, in general, technology is trying to disrupt in general. And I do think for those people who don't provide a service, advice, consultative services, if all you're doing is order taking, all you're doing is inputting information into a computer and letting the computer let you know whether or not someone qualifies, yes, you'll be out of a job in no time. But if a computer is telling you whether or not someone qualifies, you then have to tell the computer, is that the right loan for that person based on my conversations? That's where I think there's some longevity for people in this industry.
Are certain types of, like, say I'm a broker, or say I like helping first-time home buyers. Are like banks better at that, or like refis are much easier if I'm a broker? Does that make sense? Like, hey, brokers can do.
Yes, that's a good question. So banks tend to, they have to adhere to what's called the CRA rules, or Community Reinvestment Act. So because of CRA, banks may very well have buckets of money that they have to lend to first-time home buyers, especially those that are in the LMI, or the low to moderate income census tract. So for that reason, a bank's going to be more apt to have special programs for people when it comes to down payment assistance and grant. And because a lot of those programs require a certain size of your company, a certain net worth, a certain clout, a lot of times brokers don't have access to many down payment assistance programs. Most independent mortgage bankers do. Most direct lenders are big enough. Their companies are national. They have a corporate headquarters. Like, some of them are even publicly traded at this point in the cycle, that they have access to all the down payment assistance programs, but a local mortgage broker shop would not. When it comes to refis, I mean, look, at the end of the day, yes, there are definitely, when it's a refi market, that's what banks are doing. Period, end of story. But think about what banks already have: a clientele base. What's the low-hanging fruit? Reach out to those millions of clients that we have and talk to them about how you could save $200-$300 a month. Or better yet, when you work for a bank, that bank may service their own loans. They have a big servicing portfolio. Well, if someone's going to refinance out of your portfolio, it damn well better be with you and not with someone else, right? Banks lose money typically when someone refis out. Like, that's not a good thing for them. But if it's going to happen, it might as well keep it in the family. So, banks tend to do a large percentage of refis, where like your independent mortgage bankers don't. The case in point, the past 2 years, I bet banks were 80 to 90% refi, 10 to 20% purchase. Independent mortgage bankers, somewhere around 60% purchase, 40% refi. Yeah, like, I'm biased, but the best in the business are full-time, 24/7, 365 mortgage lenders. That's what we do. Like, that's all we do. And we're damn good at it. But there are some very good loan originators who work for big banks. There's great mortgage millionaires that work in the broker setup. But the broker setup sometimes, for many, makes it difficult for that professional loan originator to scale because of the complexity and the uncertainty that comes with the paperwork, the legwork.
Do brokers usually have like large teams? Like, I know here, depending on your size of your team, you got to have a substantial size of your team, underwriters, processors in your team. Do brokers have that, or are they at? You
can.
Okay.
Yeah, most of the brokers I know, they're brokers because they like to do 1 or 2 loans a month. They like to make their $5-6 grand a loan and
keep it moving.
Yeah, just keep it moving.
Gotcha.
Yep. Because a lot of times when you work for a mortgage broker, just not all of them, please, I'm trying to make general statements. It's very independent. You're on your own.
Gotcha.
You're on your own. You may get some of the fattest commissions working for a broker. Let's talk about that. Commissions for a loan originator. The lowest is going to be working for a bank, usually. The most average good comp is going to be working at a independent mortgage banker, a mortgage banker, a direct lender, all the same. The most that I've seen people make, they make in the broker world.
Okay.
But when you do so, it's a give and take. Like if I'm making 225 basis points versus 125 basis points, there should be a reason I'm making 125 because I have a system, I have process, I have support, I have marketing, I have business cards and laptops and scenario desk and a product development team, and I have benefits and I have 401k and 401k match, and I'm willing to make 125 basis points versus 225 because I value that. I have the ability to grow a team, and with a team I can do more volume. With more volume I can make more money, and I can do so with a decent work-life balance.
Yeah.
I'm not saying that can't be done at a broker shop. I'm just saying it's less likely it's done at a broker shop. Less likely. Usually at a broker shop, it's that you don't see those big mega teams that are doing $100 million.
So is that the dude like he is originating his loan underwriting if he's doing like the whole thing himself from start to finish and like handing in the final paper type thing?
Well, you're pre-approving, you're pre-qualifying, you may be processing your own file, then you're having to upload all the documents into this third party's website, and you're having to deal with the communication amongst the 3 to 5 different team members who are at that particular investor that you sent that file off to. But that particular team, if you have 3 loans in your pipeline, is different than another team, which is different than another team. So now you have 3 files, which is an average LO. You have 3 files in the works where you have to deal with 3 different teams and 3 different systems versus 1 team, one system.
Yeah, right. Okay.
Yeah, but, you know, and maybe I'm 1099 and I don't have health benefits and I don't have a 401k with 401k match. I don't have marketing support. Look, there's no right or wrong, just personal preference. And please, someone's going to be like, that's not right. I know so-and-so, and he made $2 million last year, and he's a broker, and he has a team. I'm sure you are correct.
Yeah.
You're like, I'm sure that's the case. Or I'm dialed in. I'm a mortgage broker. I only broker to these 3 companies, and I know my underwriters. I have a team that awesome for you. That means you're at the top of your game and you're at the pinnacle. What I'm just trying to do is offer a broad swipe of the difference between a mortgage banker, a mortgage broker, and actually working for a bank. Any last minute questions that you can think of?
That was it.
Yeah, I did my best, ladies and gentlemen. Like I really did. Please do not kill the messenger on this. I tried to lay it out there, the world that I know it, the way that I know it, and why I know it this way. If you have any questions or comments, look, YouTube is a great way to communicate. Just leave your comments or hit me up on LinkedIn. I'm Dustin Owen on LinkedIn. I'll be more than happy to take your comments and help you out any which way that I can. Continue to like us, continue to share us, continue to subscribe, and give us reviews only if they're 5-star.
Right.
And check out the website.
Yes.
Let us know what you think about tloponline.com. Sales tools, videos, guides, trackers, etc. He's John Coleman. I'm Dustin Owen. That's all the time we have for you today. We'll catch you on the next episode.